So welcome everybody. It's currently Sunday, 11th of July, 7:30 a.m. and we're going to do our usual weekly recap on gold. The week of course started Monday, 5th of July, which was actually a U.S. public holiday, celebrating the 4th of July, Independence Day, coming through the Friday, 9th of July. So let's start already with our analysis. So the previous week was the NFP week. We were in the previous weeks in a order block. We spotted that the higher time frame bearish trend line was being respected on the hourly time frame from the highs at around 1902, then 8055, and then was respected even with the shrinking order block. Here the wedge created between 1772.5 and the trend line. Of course, the highs of the order block were 1795 and the lows were 1764. Key levels, but also being respected and charted also as resistance and support. We saw a meltdown, a retest, failing to break above. Then we spotted a double bottom after failure to break below these levels. Of course, there was not enough fundamental reasons to for gold to be already so bearish to break even below 1750, to maybe go revisit 70s, 17 flat. So we got a aggressive pullback last week. We saw NFP and unemployment data that were conflicting, and therefore created these big dildo candles. And we're starting the week now. So we're coming from an NFP showing that the labor market is still not ready yet for stopping the stimulating policy by central bank, as seen in 2012 and 2013 from investors, and smart money is just necessary to see optimism regarding the lower inflation that is nowadays due to money printed and supply chain disruption, to take their money from gold and put it in USD. We saw in the 2012-2013 how the pricing concept was really strong 2 years prior that actually interest rate rise. Investor needs to see the potential rise in dollar value in order to buy it from its lows. They want to see less supply, higher demand, want more purchasing power due to less CPI, PPI, PCE. They want to see an healthier economy thanks to an increasing healthy labor market. Geez, now I'm reading it, is so many typos. This week, FOMC minutes will show the details from the last month Fed meeting, expecting the minutes on Wednesday. So we are expecting the minutes on Wednesday. We have to also take into consideration the JOLTS, jobs opening, and the weekly jobless claims. So what are we? Where are we now? We are at the 1789 level. We are playing the lower time frame bullish trend line and the key levels. So we want to see a break above 1789 for quick scalps until to revisit 1795. Above 1795 we can see a break and retest, but we can also see that at 1795 we see a huge rejection and then failing to break above and then price going down. Of course, this will be high risk, high reward sells, while high risk, safer sells will only be below 1781 as per now, since we don't know if price will go above. So let's see, as usual, as price is going to move. We jump on the 5 minute, and this was the NFP data, 1789, 1795. Okay, perfect. So we see during London session, we had the start at London session. Remember that today is a public holiday for the US. So what do we see already? We see 1789 gets broken, retested, creates a double bottom, and then moves up 60 pips as per analysis. So what we were expecting was where high risk high reward buys 1789 already played out for 70 pips, 60 pips, sorry, and then got instantly rejected. Remember that 1795 is a huge resistance area since it's the top of the order block. So now we see price ranging through New York. Always bouncing off 1789, but without any particular action apart from that. Okay, let's go to pre-London again. Okay, so overnight we saw a break, a retest of 1795. This is all overnight, and Asian session managed to bring the price at 1803. So let's go on the analysis of the 6th of July. Overnight during Asian price broke and retested 1795 with dollar weakness and continuing got bullish momentum. So you see how the trend line that we charted the previous day was still being respected. We can expect a pullback during London hours to retest again. So after this big impulsive bullish, some retest of the trend line of the key level to further continue up, or we can save buys if we see enough juice to break above 1803, already 1803, and continue up. So when I made the analysis, we were a few candles, we were here. So we see a break above the structure. Okay. Okay, it's fine. So we see we're going to see the break above 1803. So we see an impulsive break, then an order block gets created. Break above, fake out, back in the range, below. Retest again of 1803 key level. What we can see is price is in a bigger order block, of course. It's not breaking above this previous highs. Now it's managing to makes a fake out of like 60 pips and then comes back into the range. Okay, what are we looking at here? So safest sell were only considered with this price action. Of course, we were not directly expecting price to go to 1812.5, but as we know of gold, when price is creating new highs and is failing to make new highs, a huge sell-off, profit taking can be happening, can be predicted and expected. So let's jump back a few hours here. Okay, so what are we seeing here on the hourly time frame? We see big impulsive push, retest of 1803, price already making more than 112 pips as per analysis. If you 1803 retest, you can see then this was all cold and expected in the analysis. Pretty clear. And let's go and see what is happening now. So we see a new high created. We are in almost London close. Let's leave it like this. We see price trying to break above 1812.5 again, failing to do that. This can be the sort of fuck you candle. So we see break above, we see huge rejection, consolidation, sort of liquidity grab. We see another retest, failing even to break above the key level, not even revisit this previous highs. And then we see a meltdown. of course, profit taking, huge profit taking, already more than 200 pips. This is all New York session. And of course, a bounce of the 1789 key level. This can sort of be a rebound, an overshoot of a 1795 due to the momentum, since now we see price ranging around 1795 key level, which is okay, let me fix a second, which is the bottom of the order block. So apparently the data on Pepperstone was only up to the 6th of July. So we are going to continue on actually trading view. So we are currently now, we saw the action 1812.5, the rejection, and we saw price at 1795 again. So we're going exactly on the Wednesday, 7th of July. We see the reaction, big reaction, at the sell-off, the taking profit, failing to break below 1795, which we remember is at the top of the order block. So what are we going to do is we want to see if now price is going to create a double bottom at 1795-ish, around here, and to continue up. Of course, safer buys will be only about 1803, break and retest, and we have to show the weakness of the dollar. Today is the day of FOMC minutes to understand the details of the last month meeting. So let's go here. Luckily, I don't have the actual replay function, but we're going to the data as it is. So let's zoom in. Okay. So it's currently here, 7 a.m. We saw price ranging. We saw during Asian session another rebound from 1795 to revisit, but failed to break 1803. Then we see some liquidity grab, some weaker bearish action, failing to break below. This can be the sort of order block that we were expecting. Break above 1803. Remember, this is not even London open. Look at how price is moving here on gold. Price does move like this. What price loves to do on gold, but also it's something that you can apply to every pair or the block, and then continue the trend. That's something really important to understand for when watching at a pair, when watching at some action, because you might think, okay, oh gosh, price is now in a consolidation, is going to go, never go up. So maybe you buy here, you see consolidation, and say, oh gosh, I have to close the trade. No, because it's a consolidation. It's not breaking any new lows, so there's no reason to sell. So we see a break, a retest a little bit deeper, retest the previous lows, and then continue further up. 1803, the proper retest of 1803, failing to break, and then moving up 60 pips during the London session and pre-New York. Then what we see, so here we were expecting a double bottom that was created. We saved buys about 1803, so 60 pips already, and we see a big dip, and then we start to see sort of intraday corrective bearish trend, which you can see creating higher lows, higher highs, higher lows, lower high, lower lows, lower high, failing to make a new lower low, sort of creating another block here, sort of support. As you can see, this due to the impulsive action, this can be just a wick, so it doesn't have any closure below this level. Failing to break 1, 2, 3, 4 times, and then moving back up again for like 70 pips. Exiting, and definitely here going away from the bearish trend. You see a sort of picture perfect retest of the trend. So now we enter into of course end of London, end of the day, so we enter into a Asian session, not even Asian, market close and market open, and do Asian of the 8th. This week, these whipsaws, were the FOMC minutes. Nothing special was said, nothing particularly either positive or negative, so neutral. And remember that investors are waiting for news regarding the interest rates, the start of the tapering, in consideration with the labor market conditions, which are not great yet, as expected. So we start the Thursday. As you can see, we saw another block creation all yesterday. We have the 1795 retest again. We want to buy again higher risk, high reward buys at rejections of the. So we saw the other block, the double bottom we created yesterday to continue up. We are expecting the same today because 1795 is a very strong resistance level that turned into support, into a strong support as well. So we're looking forward to see a double bottom, especially if the jobless claims show weakness in the dollar, and of course if it breaks below with short-term dollar strength, we might consider the pullback, this huge correction phase on a higher time frame bearish trend. Of course, a rejection on double bottom at 1795 will give ideas that are not really yet investing in dollar strength since the QE are still in place. So let's see how it plays out. Nope. Okay. So it's currently as Asian. We see during pre-London and on London Open, we see the failure to break below the 1796 level, as pointed out here. Of course, we are at 1795, but we are failing to make new lows, and we see an aggressive spike up. We see already from the top of the other block already 35 pips. Then we see an impulsive out of the 1803 key level. We see another block created. We see here failing to make new lows, so this could be a second entry. So of course, either you enter here at the break of the other block, or the block highs, and you enter here, or either you see up, consolidation, fake out, and then you see that it's not able to make new lows, and you can enter here. So one and second entry. Let me clean. And we see price to further continue up for many pips, even above 1802.5. Then we see break below, rejection, retest, and rejection of 1812. and then we see price is not even coming to the re-entry here, and continues up. Very impulsive moves, very difficult to trade this move for 100 pips, failing to make new lows below the previous. This was the last consolidation, the last low. So if we want to see on the bigger picture, we can say okay, we are impulsive, consolidation, impulsive, consolidation, dig a little bit deeper, but not breaking the highs of previous highs, and then continuation up. So this is nothing special, nothing. Of course, it's not easy to trade in this moment, but it's something to be considered. Impulsive order block, impulsive order block, little bit of a liquidity grab, and then continuation up. Okay, then what we see? We see making new highs, almost 1820. We see liquidity grab at 1812, retry, make new high, but failing to break above. We see then a decline. This is London session, London, New York Stock Exchange open, and then we see a meltdown taking profit taking to last until we retest again 1795. So as you can see, order block and the failure to make new lows spotted. The price moving up to almost 1820, 1818. Huge taking profit like happened here. This week, the taking profit happened already twice during the week, failing to have closures below 1795. Then we see a correction to retest the 1806 previous highs. This is a huge price sensitivity area. We see a rejection, and now we are expecting price to make a new double bottom on the hourly time frame, retest the trend line, and continue up. So I was expecting some profit taking, not spotting that actually we had already a lot of profit taking yesterday and during the week. So buyers are printing higher highs and higher lows, although it's not a clear and picture perfect uptrend. Bullish structure cannot be denied. You cannot deny higher low, higher high, higher low, higher high, higher low, higher high, maybe higher low. So it's nothing that is not expected. So as an Asian session, during the going to Friday, last day of the week, Asian, okay. Pre-London, we see a pullback, retest of the trend line, and then a bounce up above 1803, a little bit of ranging, nothing crazy, not a single break of the previous highs. Retest again of the trend line, and from here with New York volume, we see, okay, finally price is making a trend, not the perfect picture perfect one, but is definitely making a trend, bouncing from here. Safest buys above 1803 retest. Of course, it was not easy to spot the entry, but they were working 1886 pips. And then we see bounce and rejection at the 1812.5 key level. Okay, so you see how it perfectly reacted to the trend line. This one was actually yes, the lower time frame bullish trend line from 1798 18 to 1812 on the dot. So this is it, guys, for today. No trades were taken since last week. I started a new job, and from next week I'm trying to really get back into the execution of trades, as well as making daily analysis as always. See you guys.